Thanks for listening to The Derivative. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to The Derivative by RCM Alternatives, where we dive into what makes alternative investments go, analyze the strategies of unique hedge fund managers, and chat with interesting guests from across the investment world.
So you have extraordinary athletes, not to take any on. They're some tremendously skilled in that particular sport. Well, fine, nothing wrong with that, and they get people enjoying watching them. But they've made fortunes because they're particularly skilled. Same with some of these traders. They've made fortunes because they're particularly skilled. It's just, I think the sports analogy is probably a good one. And in fact, in some ways, the mindset of these traders is a little bit reminiscent of what some professional athletes do.
Hello, fellow Wizarding World fans. No, we haven't gone Harry Potter fan club pot on you. We've got the guy who sat down with more money than you'll make in 10 lifetimes, the guy who coined the term market wizard and has now written 6 different books in his Market Wizard series. In addition to roles as director of futures research for some top Wall Street firms and a partner at a London-based hedge fund advisory firm. We've got the wizard maker himself, Jack Schwager. Welcome, Jack.
Hey, thanks. Appreciate it.
I put on my plaid shirt because I've seen you in that plaid shirt in other videos, so I'm glad I nailed it.
Yeah, you're pretty safe on that.
And you're out in Colorado?
Yeah, Winter Park.
Winter Park, I know it. Skied there a few times. And where you just mentioned offline, you also do Boulder in the summertime?
Yeah, well, Boulder spring. Our intention was to stay in Boulder for half the year, and Winter Park half the year. The 2 seasons here, winter and summer, because summer is a lot more pleasant here than Boulder, just because of the higher elevation. It's very comfortable. Park, yeah. It basically skipped the mud season.
And skip the traffic's become unbearable, right? You can't live in Boulder and try and get up into the mountains with any frequency.
Boulder isn't bad. Actually, I've lived in multiple places, and Boulder's actually pretty good traffic-wise.
No, I mean getting in and out of the mountains.
Oh yeah, well, if you're going on a weekend, but I have the luxury. I have the luxury of working on my own, so I'm never going with the traffic.
I hear you. And my brother's actually a realtor out in Boulder, lives in Louisville.
Yeah, okay.
Yeah. So when you're going to buy your next $10 million house, give me a call and I'll set you up with it.
Email me his contact because I might sell the Boulder place, but anyway.
All right, done. And I always joke with him, like Illinois here, Chicago, it's gray or sunny or raining or snowing. Colorado's either bluebird skies or snowing, right?
It's like 300 days a year is sunny, So
yeah, that's unbelievable.
Yeah,
I love it. So give us a little background before we get into the book. So what'd you do? You kind of had a life before you were an author, right?
Yeah. Yeah, so my first book was not a market wizard book. It was a book called A Complete Guide to the Futures Markets, which was a big tome, like an 800-page book. My effort to write a decent book on analysis of futures markets, which I didn't think existed at the time, was in 1984. That's why I took a sabbatical to write it. But before that was the first one, I got into markets. My first job was in the market. It was a futures research analyst job. Does that still exist? I don't know. With a firm that's long merged multiple times at the time. I mean, the firm was Reynolds Securities. Anyway, that was in 1971. So I spent 2 years as a research analyst, and I stuck my head out and looked for a better job and got a research director job, and I did that for over 20 years. And
what did that entail? Like back in the old days, printing out charts or?
Yeah, well, it was fundamental and technical, yeah.
Yeah.
So it was, yeah, like printing the weekly reports and fundamental reports and technical reports and, yeah, being late, being in the office like till midnight on Fridays, getting the stuff out so it'd be ready first thing the next week, beginning of the next week, yeah. Kind
Did
of
you
a
ever
different world, you know.
did you ever have to? Some of these groups would write both sides of the market. The same guy, right, would write in their report basically, here's the bull case, here's the bear case, with the same data.
I didn't do that. I was just wrong or right, you know.
And that was all commodity markets, or
Yeah. So I was strictly all futures. In fact, yeah, I mean, I was always only involved in futures. I didn't get involved on anything to do with stocks until I guess, well, yeah, I get probably when I was with a hedge fund advisory firm, uh, began in 2001. So at that point, you know, it was more it was more managers doing equities than futures. So that was the first time I really had to be involved with people doing well. All to be fair, all the Market Wizards books have a lot of equity traders. So I guess probably that was the first Market Wizard book. '88 was when I first started getting involved with people who were doing equity strategies.
right? And your commodity background was, or futures was also like currency and fixed income futures.
Yeah, everything. Yeah. So I'm old enough. I'm old enough. I came in before there were financial
Currency.
futures. Yeah. So
Yeah,
it's kind of a different world. It was truly then the term commodities was not a misnomer as it is now. I mean, it still applies to what, maybe a quarter of all trading. But back then it was only commodities, strictly, you know, grains and livestock and gold and stuff, you know, metals. First futures among currencies, I guess, were first around 72 or 73. Very,
Yeah.
very low liquidity in the beginning. And then we got the first interest rate market, which was Ginnie Mae's, which was a really obscure contract. It always amazed me. Of all the things to pick for first contract, I took Ginnie Mae's. But you know that was successful to some degree, and then got supplanted when, well, originally it was T-bills, but eventually Eurodollars kicked T-bills out, and
yep, and
it became T-bonds and T-notes and Eurodollars. But all of that, and stock indexes, they also came in. In fact, when I wrote the stock indexes came in also quite a bit later, a bit later. So there were no financial
yeah. Which
securities.
these days, right? You have to delineate between grown in the ground commodity futures and quote unquote commodity futures, which include the bonds and everything. And where were you during all this?
I was in New York. So yeah, so my career, that early career, I was in New York. I was in New York, you know. I started, for probably 25. Well, not in New York City. I was in New York City part of the time. Then I moved out to the exurbs.
Yeah. Were you ever tempted, or they want you to go to Chicago to be a futures guy?
No. I mean, I'm nothing against Chicago, but I actually, if I was going to be in a city, I did like New York. You know, I mean,
and you were from Brooklyn,
Central Park. You know, there's no Central Park in Chicago. You know, it's or equivalent. You know, to me that's a big deal because I was a runner, and it gave you kind of the access to being in outdoors, even though you lived in the city. So I kind of always liked New York as a city.
All right, we'll argue Chicago versus New York another time. But you grew up in New York?
I grew up in Brooklyn.
Yeah, and went to college, Brooklyn College.
Brooklyn College, and then I went to Brown University for graduate school.
I was just arguing with someone on Twitter who puts the endowment performances on a nice chart of all the Ivy League schools.
Uh-huh.
But the chart is different colors for each school, and brown is like purple. And I'm like, what? You have to make brown, right? Like, make Dartmouth green, make Cornell red. Like, come on, this is easy. Easy graphics here.
You would think.
So then you mentioned you started some of these first books. It just came out of those early career and early tried to get more people looking at your research, or what was the motive there?
Well, I really, when I first got in '71, there was really no book. There probably were some books, but there really weren't any. There wasn't much, and I never thought there was a good book out on really comprehensive on both fundamental and technical analysis. So I took a sabbatical. This is pre-PC, so it was an enormous amount of work. to do. Because I would do charts by hand. I would do multiple regressions on the calculator. One of those old calculators with a bunch ridiculous.
Yeah.
So things took a lot longer. And then I would dictate everything and send it to a secretary from my previous job who was freelancing and, would send me back, the typed versions. And luckily my first drafts were not bad. So that made it somewhat, that was actually the smoothest part, was the actual writing. But all the illustrations and analysis was what took a lot of time.
Yeah, it seems like in those days they would fight with each other, right? Like you wouldn't see a fundamental guy want anything to do with a technical analysis.
Yeah, no. So and so I had been exposed to both. I started out as a fundamental analyst and gravitated to technical analysis, but still had the knowledge on the fundamental side. So I was kind of well positioned to do one.
And did anyone buy those books or what?
Yeah, it did pretty well. For that type of a book. It's not a mass audience for 800-page analytical books, but, given what it was, and I wasn't writing it to sell copies because, I kind of say half jokingly, but it's really true, that the sales of the book are inversely correlated to the formulas in the book. And so could have sold a lot more copies with fewer formulas. But it did reasonably well and was actually the catalyst for the Market Wizards book because another publisher was familiar with the book, and because it did well for that type of book, they invited me to lunch and they wanted me to be an editor-in-chief for a whole series of analytical books. And I said, no thanks, I've done that. I just wanted to write the book on analysis of the futures. I had no desire to do more. I said, I'm going to do anything else. I want it to be more broad audience. And I said, I had that idea of Market Wizards for years, but as a research director, it's more than a full-time job by itself. So I just never got around to it. And I said, if I was going to do anything else, and I threw out this idea, they said, fine, do it. So that was the catalyst. And so the first Market Wizards book got done on, weekends and nights, basically.
But what was, so you'd had that idea while you're working on all this other stuff. What was the kernel of that idea?
I got the idea somewhere, I knew some I knew some of these traders, and I had written a book, and I thought, hey, if I do another book, probably a neat idea would be, how about a book where you go around the country and interview some of the best traders? I thought that'd be like a fun book to do. Especially
they were using they were using your research or something? Or what?
No. I had actually, let me say a word. I had actually worked at Commodities Corp for years. I knew some of those traders.
Okay.
And, Michael Marcus, who was chapter 1 in the first Market Wizards book, by fate, and I always say, so much of life is luck. I've been successful, but, I could have been a nobody too. It just, I happened to have some lucky breaks. And one of those lucky things was I was going into a job which Marcus was vacating to become a trader. And he was in New York for a couple of years. We met when I was coming in. He was cleaning his desk out. And we kept on getting together for lunches and sort of, so I knew him until he left. I knew him. I had contact with him until he left for the West Coast. And then through Marcus, Marcus was the one who brought me into Commodities Corp. And, then through Marcus, I knew Kovner. And so that was like the lead into some of these traders who were in the first Market Wizards book. So I knew I had those traders that I could interview. And then I figured I would just find others.
Did you ever think, hey, I should just profile Commodities Corp? That would have been an interesting book in and of itself.
That would have been, but, I never did. Don't forget, this is when I was, back then, it wasn't yet the legend that it became ultimately.
I guess, yeah.
Hindsight, right? I never, there was somebody did do a book on it. It's sort of almost a pamphlet, like not a big book, but pamphlet type book. And I think it was called Up, Down, Up, Down, Up, Down, something like that. And it's a pretty good book. It's as somebody was there, it's accurate in its depiction. But there was never a really comprehensive book written that I'm aware of, really full length.
I'll throw out an idea for your next book to trace and interview all the people that have come out of the O'Connor tree here in Chicago, right? That were option market makers that created all these option prop firms in Chicago.
Yeah.
Like every third person you talk to here is very successful, and one way or the other links back to that tree.
Yeah, although I did interview CRT, the founders of CRT, which was, O'Connor, CRT, they're pretty much similar firms, similar operations.
So that first Market Wizard book, how many traders were in there? I've read it. It's been a long time since I read it.
I think it was 17.
17. And that was just, you were like, all right, this is fun. Like, you're one more.
I know. I first of all, I don't use all the interviews I do.
Okay.
It sort of comes out in the process. And yeah, you don't know how long the book's going to be because, for every chapter, the interview is far longer than the chapter. So there's a lot of editing and kind of distilling that goes on. Otherwise, the chapters wouldn't read very well. So you never know how much you're going to come out, and so I could have an interview that and I did, in fact, back in the first Market Wizards book, I think I did have because I have this image of going through all these pages of transcripts of it, and you could have a couple hundred pages of transcripts, and the chapter ends up being 20 pages. So you don't really know how much, how long the book's going to be. It just kind of evolves, and so I don't remember how I decided. When I decided to stop, I guess I just intuitively figured, well, I've got enough of this. I got more than enough.
Right.
And that first book ended up, I think, being over 500 pages. So I probably had more than enough.
And in that first one was Bruce Kovner, Paul Tudor Jones, Sequoia, Bill O'Neill, Richard Dennis.
Yeah.
Some big names. Was there anyone you were most kind of intimidated to go sit down with?
No. This is, I don't want to sound, all these people were, way, a million times better traders than I was, which is the reason why I'm interviewing them. But I was never, I was never intimidated to interview anybody, really. I just kind of figured I had some knowledge of my own, and I was going to probably be as sensible or informed an interviewer as they're likely to get anyway. So, I never felt intimidated. I always had I had knowledge. So,
Any of them, once you walked in the door, right? Some of their setups and everything were like, uh-oh.
No, there was some, I can remember the toughest interview, well, there were a couple of tough interviews, but like Tom Baldwin, I can think of specifically, who was kind of reluctant to do it. And Baldwin, for listeners, viewers, whatever, who don't know Tom Baldwin, at the time was like, this incredible trader mostly in the T-bond bit. I think he was I believe he was just in the T-bond bit at that point, but trading really enormous size for an individual trader. And this is a guy who started out with nothing, and I think he had a supermarket job or something. I don't know. That was part of the story. It was kind of incredible. He really came from nothing and then is trading this huge amounts of T-bonds in the pit. So I really knew I wanted to interview him. He didn't want to do it. He agreed to do it. As luck would have it, it was St. Patrick's Day. And he, so here he is after the markets. He's in the office, really on a kind of just ready to spring out, and guys keep on coming in the office saying, we'll meet you at the bar, whatever. And he's ready to go.
This is in Chicago on St. Patty's Day?
Yeah.
That's an event. Yeah.
Chicago, St. Patty's Day, and he didn't want to do the interview, and he wants to go to the bar with his friends, right? So that was like really tough. And I knew that if I hesitated for a second, most interviews, it's more relaxed. You can, somebody answers, you can think about, But with Baldwin, I knew I couldn't allow a half a second between his finishing and my asking the next question. And the first time there was like a second pause, boom, he was gone. Yeah. So it was like literally half an hour or 40-minute interview. But that was tough because I had to be intensely focused, and I knew I just had to keep the questions coming, or else he was split, and he did. So that was a tough one.
You'll find this amusing. So that's come full circle. So my first foray into the futures markets, I was a clerk in the bond pit.
Oh, really? Yeah.
Yeah. So I worked for another group, but Baldwin, you quickly knew who he was. I think he had a purple coat, if I remember correctly. Maybe a listener can correct me if I'm wrong, but a big guy, right? And he's trading 500,000, 2,000, 5,000 lots against Goldman, against all these big players, moving the market. And I was more of an analytical guy, and I was trying to learn while I'm down there. And I'm like, why is the market moving? And invariably you'd get the answer, because Baldwin's buying, right? There was no because Japan cut rates or the Eurodollar's doing this. It was just because Baldwin's buying. Do it. I'm like, that doesn't quite make sense, but he was that big of a force.
Yeah, he was. And speaking of that, another type, ironically, the other interview that was probably the toughest was also another giant bond trader who also started from nothing, which was Gary Bielfeld, BLH. And I remember, and I think he was in the second. I think he was in New Market Business. But I remember as an analyst, as a research director, you always had to put out these little summaries of what happened in the market, and you'd always you have people on the floor. Each brokerage had the guy on the floor. BLH was a buyer, Solomon was a buyer, or whatever. And BLH was always being mentioned with Morgan Stanley and Solomon, these big firms, and he said, "Who the hell is BLH?" And then I find out BLH is this one guy in Peoria. Literally one guy in Peoria. And he's trading 10,000 bonds at a shot. So I said, that's got to be a story. And and then I found out that he started out trading literally one corn contract, two corn contracts, and built it up to where he's trading 10,000 bonds. So he agreed to do the interview. I went out to Peoria to interview him. But the image I used for him, and I think it's very appropriate, he was like Gary Cooper. At least hopefully people know Gary from the old films. Yeah. But nope. I mean,
he was in a deposition.
Just these really terse answers.
Yeah.
And I could see him it was an incredible story. I'm getting nothing out of this interview. And then finally he says something like, it was going to give a poker analogy. And I said, okay. So he said, turn off your tape recorder. And I turn off the tape recorder. And he gives me a good analogy about poker. I don't remember what the analogy is, but it was perfectly innocent. I said, why'd you have me turn off the tape recorder? Well, he said, well, I didn't want people to kind of confuse trading with gambling and stuff. I kind of remembered that answer more or less, and I still used it with his permission. But that was the one chapter where my narrative was longer than the actual interview, because there was so little in the interview that was usable. And I was just some people are very, very articulate and give you great stories, and some people, and Gary was on the other end of the spectrum, so that was another tough one.
What do you feel like those days are gone? Some of those floor trade, right? There's no more floor.
No more floor.
Now it's computers trading ones and zeros.
There's no more.
Some of those guys, especially in Chicago, right? You didn't need they didn't care where you came from, what degree you had. Just if you're aggressive, you're a big guy, we'll get you in here, we'll teach you the ropes. So I feel like those days are gone, and you're not going to run into those kind of traders anymore.
No, but you can still find individual traders who are doing spectacularly well without having the pedigree. So they're out there. They're still out there.
I got one other quick, funny floor story of that I just heard recently of a guy on the floor that all these guys knew, and they all thought he was a terrible trader. And he would tell everyone that he had a job loading baggage at O'Hare because he wasn't making enough money trading. And then another guy who was on the floor I just talked to recently saw this huge mansion of a house and doing quite well and all this stuff. And they're like, what? And he finally opened up of I wanted you guys to pity me and not try and take advantage of me. And so he was running the long con the whole time of doing his trading and making good on it. So anyway, were there any big names that you wanted to get in the book that you couldn't?
Sure. And the biggest name and my biggest regret is George Soros, who is probably, if he's not the best trader in the last 100 years, he's certainly, I don't know who's second, who's first, But so yeah, doing the types of books that I do, Soros was an obvious name. Also, he has a great life story, escaping from Europe during, World War II as a Jew, and and then he went on. When the Berlin Wall came down, he spent all those years in the Soviet Union and Eastern Europe trying to get those countries on a capitalist track. So he had a lot of interesting stuff in his life besides the trade, and the trading was just, legendary. So, but I never actually spoke to Soros. I never actually got through to him. One of my interviews was Stanley Druckenmiller, who did actually run the Quantum Fund for many years while Soros was in Eastern Europe and the Soviet Union. George would call in and stuff, but he was Stanley that was running those funds. And I did get him to ask Soros for me, but for whatever reason, Soros I never got him to agree. Although I never was able to directly ask him. And another one was, which I had less regrets about because I figured it was going to be an enormously difficult interview, was Jim Simmons of Renaissance, which is probably the best performing fund of all time.
Although he strikes me as the same terse answer kind of guy. I have no idea if that's true or not, but if you got him, he might say.
What kind of guy?
Terse answers, right? Short answers and
probably, yeah. And I did have experience. He would also be, I'm sure he would have been extraordinarily close-fisted about any information because given the types of strategies they do, he's not going to tell anything. He's not going to reveal anything. And I did have kind of a similar interviews. I knew what to expect with David Shaw, who's another brilliant mathematician. He was a computer scientist, but still one of those brilliant quant guys, and also very secretive. So that was an interview I did get, but I kind of imagined that it would have been the same with Jim. It would have been a really tough interview to do because of his being on guard. And he did think of me. I asked him twice. Once he turned me down, and then on the next book, he thought about it for 2 weeks and turned me down. And there is a book, The Man Who Solved it was called The Man Who Solved the Markets.
My computer is on a homemade work from home 2-book stand right now. That one of the books is that book that I haven't read yet because I've gotten a lot of feedback.
So let me give a free plug. I don't know I don't personally know the author, but it is a phenomenal achievement because I know the difficulty, how secretive that firm is, and his ability to get so many traders to open up and so many people and to put it all together in a highly readable narrative is quite an achievement. So
I've gotten the feedback from a lot of people that it doesn't give enough, and I'm like, but it's better than zero.
It's a classic. I think that book will be around for decades.
All right, I'll go read it. And then, do you think? Well, I had one more comment on Soros. Do you think he's a great trader or had a great trade?
No, I mean he's famous.
Or are those different things?
He's famous for breaking the Bank of England, but
and wasn't that mostly just trend following?
He's repeatedly done great. Achieved a magnificent performance. So that was his trade he's famous for. But he was always trading. So I mean, in his career, God knows he's had tens of thousands, hundreds of thousands of trades. So he's not a one-shot wonder by any means. He is, like I say, I never got to interview him, but from what I know about him, and also like Druckenmiller, who's a phenomenal trader in his own. The respect he has for Soros itself speaks volumes.
And the line's kind of blurred, right, between a quote-unquote trader and what becomes their trading firm.
Yeah. I mean, of course, he had many, his firm had many funds, but however you cut it, whether it's through his firm or his own account or anything, he's got to be there, if not the best, very close to it.
And speaking of that, who among those original wizards or even any of the books has become like the most full-out wealthy? Probably either Paul Tudor Jones or Druckenmiller.
Well, maybe from the early books, yeah, I don't know. From the early books, it might be Kovner, it might be Paul Tudor Jones.
Yeah,
Yeah,
they're
don't
into the
know.
billions.
Yeah, I'm sure. I mean, they ran, they ran hedge funds for a long time that managed tens of billions. So I'm sure. I have no idea what their personal wealth is, but I'm sure they did quite well.
That's I sense a blog post I could write up. I'll go grab all the names, put a little chart together of their supposed net worths, and tell us. I kind of found a lot of those big names were kind of futures traders and had a bit of a trend model to them. Do you agree with that or no?
No, I think the almost to a person, the really big achievers didn't trade off a model. They were really discretionary traders. So
Okay.
I think it's essentially true in almost all cases. I mean, there are exceptions in later books, like, there are always people who did well, trading models, but the really exceptional traders were almost always discretionary.
And then do you think there's, for the whatever 50 that you've interviewed, right? Are there 5 million that are out there? Like they're the luckiest or the
Well,
best?
no. So of course, I didn't. There were lots of great traders I never got around to interviewing for one reason or another. So it's not like I interviewed all great traders, and figured it's an average of 15 traders a book and 5 books. So of the ones that appeared in the actual books, maybe there's like 75 or whatever. But of course, there's a lot more great traders than I interviewed.
Right. My point being that there's millions of people who've blown out on the other side of the coin, right?
Oh, yeah, sure. Yeah. So it's a small I mean, it's certainly not representative. Yeah.
Yeah. The NFA would have me, right, if I was trying to highlight it, say, hey, you can't cherry pick these super successful guys.
Yeah. Well, in a book you can, I guess. It's not.
Yeah. Where'd you get the idea for the unknown wizards? Which is kind of funny because a lot of the original wizards were unknown at the time, right?
Yeah. So you're totally right. Okay. So, from the very first Market Wizards book, people like Michael Marcus were unknown, would be unknown. Nobody in the world would know they existed if it wasn't for the book, right? Because they did phenomenally well, but they were very low profile. Didn't give any other interviews or whatever. So there were certainly unknown people in the other books. This one, the idea was, well, the previous Market Wizard book was hedge fund Market Wizard.
Yeah.
So that was only hedge fund. So it seemed one thing was there was a good counterpoint to that, was go the other direction. No hedge fund guys, just solo traders trading their own money who are just done phenomenally well and nobody knows they exist. So as purely, that's it. That's the whole book. That's part of it. And the other part of it was that maybe the idea came through FundSeeder, which is a startup that I co-founded. And the idea of FundSeeder was to create a platform of performance analytics that was free to traders. The interest in that was to create a database of traders who, unknown, undiscovered, so to speak.
Yeah.
And of course, you get, a lot of traders, are not particularly good. But the concept was that within all the people you draw to the site, there'd be like, I don't know, 1%, 2% of traders that are really good. You don't need a large, even 1% is fine.
Yeah.
And so that was that concept. And so the idea from the very beginning, when we did the first website and stuff, was that there would be a book. And I think the working title was originally Undiscovered Market Wizards. And I ended up using Unknown Market Wizards. But that was the intention all along. And indeed, a number of the traders in the new book did come off the FundSeeder platform.
One issue with that, right, of the persistence. So if they might be good at that snapshot in time, but can they be good moving forward?
Yeah. That's always an issue.
Yeah.
But I'm basically looking for people with 10 or more years of track record. And so with I made one exception in this book. I had like an 8 or 9 year track record, but it was so good and I was so convinced he was going to continue to do well that I had no reservation. But the other people are all about more than 10 years, some cases near 20, in some cases, in one case, over 30 years. So there are longer track records, and that kind of speaks to that problem.
Yeah, and then Peter Brandt, who you led off the book
Yeah.
with, who's a good follow on Twitter, it was interesting there because you just said hedge fund market wizards. Those are traders running other people's money.
Yeah.
Unknown market wizards are people just trading for themselves. But Peter kind of bridged that gap. And
so he was. So Peter was the exception, So he fit the model of being a solo trader, but he wasn't unknown, at least not in the trading community. He's still, I think, in the investment world, since he doesn't manage money and all. He's not a hedge fund manager, so in that world, he may not even be known. But he was certainly had a large Twitter following, particularly over the last few years. But I made an exception because he still was a solo trader, and I not always, but for some time knew that if I did another Market Wizards book, I wanted to have Peter in there. Peter and I are friends. I know him. I know how he thinks. I know his ideas about the markets. And I felt he had a lot of value to contribute. And I wanted to kind of immortalize his concepts. I wanted to capture his ideas in a book so his thoughts would live on. And so that was one of my motivations. And Peter also lived in Colorado, and he was a couple of hours south of where I was. And he was going to be moving. So that was the catalyst, actually. I said, I knew I wanted to interview him. He was moving, so I figured, well, I might as well interview Peter because I want him in the next book. And so, but ironically, by the time I got around to interviewing him, he had already moved anyway. But that was the catalyst that got the project going.
And you got to go down to Tucson, right?
Yeah.
But was interesting to me there in the dichotomy between the two. He had great success, but he was not successful when he had to manage other people's money.
Exactly.
It really brings to light it's a totally different ball game, especially mentally when you're worried about the other people's money.
Yeah, and it's so ironic because he has this really great track record, and then he agrees. People are asking him, friends and family, friends are asking him to manage money. He agrees to do it, and he starts managing money, and he has the worst period in his whole track record. He has his largest drawdown, not immense. I think it was something like 13, 14, 15%. And for investors, it was probably closer to 10 because his money was a little more aggressively traded. Anyway, so then he decides, and he first time in his life, he starts deviating from his natural approach, trying different things, and he just digs the hole deeper. And he kind of almost loses his confidence in a way, and then just decides to, is agonizing over it and gives back all the money. The month after he'd given back all the money to investors, starts a winning streak that goes like 18 months in a row. So it's like so ironic. It's like where he starts and where he ends. You could see it's like his equity is going up, and then hits this drawdown, and then goes straight up. And that drawdown, that whole period is while he's managing up people's money.
It's like the Harry Chapin song. Are you a Harry Chapin fan? Not many of us left out there, but that
I like Harry Chapin. Yeah.
Mr. Tanner. I don't know the name of this song, but it's the guy who sings in the dry cleaning shop, and they all tell him to go sing at Carnegie Hall, go to New York, and he goes and bombs, and then he says he never sings again, except very late at night by himself. We'll put that in the show notes, that song, for all you young people who have no idea who Harry Chapin is. Cool. So then. And you also got to expand the reach a little on these unknown, right? Of a guy who's doing like Twitter, social metrics.
Yeah. So really,
to explain some of the cool things you found with these new unknown.
Yeah. So that's Chris Camillo, and that the most surprising thing to me, probably of any interview, like what was a surprise? Like his whole thing was a complete surprise because I'd gone through. I started in 1971, so God, that's nearly a 50-year career. I'd gone through all this time, and the universe I knew about was fundamental and technical. What else is there? Whatever you're doing it's got to have some element of fundamental or some element of technical or some combination of two. I never thought of anything outside. That was the whole universe, right? Or so I thought. Along comes Chris Camillo, who doesn't use fundamentals, and he doesn't use technical at all. So what does he do? He uses, you said it, social media, and so he literally created his own methodology, completely different methodology, and enormously successful. Doing it now, probably close to 15 years.
But there were a few of those well-publicized hedge funds that were going to scrape Twitter and, for the momentum and the flow, and that you haven't heard from them since.
No, but Chris really did. And in fact, he built a company because he was doing it manually and he wanted to do more efficiently. So he took a couple of million of his own money, raised a few more million, and started a company called Ticker Tags to create the software to make it efficient, that he could put in phrases and it would kick out, you get all the data of, how many times that phrase appeared and how many times it appeared in the past. And so he built this software, which, to make his trading more efficient. And then he sold the company but he built it only so he could have the software to make it, to be able to do this approach even more efficiently. So he really figured out how to do it. Funny thing, I asked him about, like, if he looks at charts to see the price. He doesn't care where the price is. Doesn't care where he's buying it or selling it. Doesn't make a difference. His timing, he doesn't. I don't know if his timing is based upon his signals he's getting from social media. Spikes in either terms that are showing that there's a great interest in something or that there's a hatred for something. Which was like it came up with SeaWorld. When that Blackfish documentary came out, and so you'd seen this consistent,
all the bad press, and he's like,
but it was the thing is he could see in social media. Normally these things spike, when they go down, it was just stay there, and so he kept on going short SeaWorld every earnings report, so it's like, so it could be on either side, and but it doesn't make a difference in what the price looks like. It's when the social media is in one direction, is that the news is known. What he knows is kind of more known than he gets out, so.
Which is, right, that's the big world these days of alternative data and satellite photos, right? There's hedge funds that have been...
Or like credit, which comes up in the interview, credit card data. So hedge funds, getting smarter and saying, well, instead of waiting for the earnings report, let's get all this credit card data. We can anticipate the earnings report. And that's all fine and good. But he's kind of earlier. He's earlier than the credit card data because he's there when
before the people buy the product.
When the chatter is actually beginning, when people are getting excited about the product. So it's not even showing up yet in the credit card data. And so he's one step ahead of the hedge funds on that.
I talked to an oil trader once who would use some of that satellite data, and then they had a new satellite that could basically see through the infrared and see how full the storage tanks were. And then BP went and bought some company that made infrared-proof paint. And they painted the storage.
Oh, I didn't know. That's a good story. I never heard that one.
Yeah, it's like, how do you win? Like, we're going to spend all this money to be able to see in your tanks. Nope, we're going to go on the other side. So what else from the unknown wizards? Any other stories?
Yeah, there's a lot of it. I going into the book, I kind of assumed that, I did my first book were people who really made their fortunes, or when I interviewed them in the late 80s, so they were part of that whole 70s decade and into the 80s. We had these enormous trends, where gold went from 100 to 1,000, and sugar went from 2-3 cents to 66. You had these incredible moves. It was the inflationary period of the 70s, and so there were these trends. The trends were a lot smoother. I mean,
that was my comment before of like the trend following was, but
trends were much smoother back then. So I kind of assumed, but not to take away from what they did, they were still phenomenal traders. But I kind of assumed that no way I'm going to get track records like that. Nowadays, after you've got this tremendous quantification of trading, you've got tens of thousands of PhDs working for different firms. You've got super computers. With all this stuff going on, the individual trader is just not going to get those extraordinary types of returns relative to risk. And to my surprise, some of the people in this book, I would say the return risk numbers are as good as any I've ever seen. In fact, in one case, probably, well, I wouldn't know. Thorpe is always there as somebody who's kind of almost impossible to beat on return to risk. But there are people in this book who just had just extraordinary performance. And there's for example, one trader started out with, well, he had a $7,500 stock account. $5,000 was the stock his father had left him, and that was a position. He had $2,500. When I interviewed him, he had cumulatively made about $50 million, coming off of that account. Wow. And I've been in touch with him since then, and he's tripled it.
Wow.
Since I wrote the book.
From like
from 2,500.
From mid 2019, it's kind
of. From him, he tripled it from mid 2019.
Yeah, from when
in the last year and a half, he's taken that 15 to like 150, roughly.
And we'll throw out our past performances, not necessarily indicative of future results.
No. So this is not. I mean, he's less than 1 in a million. I mean, yeah.
I think it would have been funny if you just put in one chapter and found some guy who spent like $1,000 on Bitcoin back in 2006 and had no trading skills whatsoever.
Yeah,
but he just bought it and now it's worth a couple $1 million.
Yeah, it will be a guy probably worth more than a couple. The thing, and people always are asking me, well, you put in on any crypto traders in there, you do crypto business, and my attitude is, well, I'm not interested. It's basically one trade.
Yeah,
it's basically one trade. So yeah, I mean, somebody like you said could have bought Bitcoin early days and just did nothing but sit on it, and they would have a better return than anybody in the book, even, right? Yeah. So, but it's just like, is that luck or is it skill, right?
I was reading the other day, there's been 3 separate 80% drawdowns in Bitcoin. So even if you bought and hold that, it's been, and then the other recent one, I'll get off crypto in a second, but there's the guy, did you read this, who has a digital wallet and he only gets 10 tries to get the password. He threw out the paper with the password. So there's 7,200 coins on there that it's worth $200 million.
Wow, no, I didn't read that one.
And he's tried to get his password 8 times and failed. So he has 2 more chances to unlock the digital thing to get his $200 million.
That's awful.
And it spikes so high, he's like, I got to get out now. Do you think it's healthy? This is getting a little too philosophical, but do you think it's healthy as a society to like idolize all these big hedge fund names?
No, I mean, I don't think it's healthy or unhealthy. It's just, it's no worse than any other, business, unless it's a business that's really providing something that's, a social good in some way.
I guess we idolize Steve Jobs and athletes and everyone.
Yeah, I mean, athletes. I mean, right. So athletes is probably a better conclusion, because Jobs did create, products that really changed a lot of things and did improve the lives of a lot of people, and was a kind of a singular genius when it came to design. So, I mean, I guess that's maybe not the best, so that's influencing a lot of people and bringing a lot of good. Athletes is a much better example. So you have extraordinary athletes, not to take they're some tremendously skilled in that particular sport. Well, fine, nothing wrong with that. And they get people enjoying watching them, but they've made fortunes because they're particularly skilled. Same with some of these traders. They've made fortunes because they're particularly skilled. It's just, I think the sports analogy is probably a good one. And in fact, in some ways, the mindset of these traders is a little bit reminiscent of what some professional athletes do. In this new book, one of the great traders in this book talks about how the mental preparation and kind of sort of mentally playing through all the different possibilities and how I'll react and getting into a focused state. All of these things, you could be talking sports. When you read that, it doesn't have to be trading. It could be sports, and that's probably a good analogy.
Yeah, like the golfers, right? Process over outcome. And as long as my swing was pure and if whatever the ball bounced the wrong way wasn't my fault, my process was sound.
Yeah.
And then that's interesting too. I don't believe you could train to be an NBA athlete, right? I don't think my son could train hard enough. We could spend all the money in the world. He's probably not going to be in the NBA. So take that over to the trading side. Do you think people can, well, I'll throw out there immediately, you're not going to buy these online courses and make yourself into one of these traders, right? But do you think people could train themselves even if they learned under these traders? Or is it an innate thing like an NBA or NFL player?
Well, like I think you can, it's a difference between, becoming good enough to play in a local league and, do well versus being a professional. Now, you have to have not only the will and the talent, you have to have the body. You have to be born with a certain type of body. Although, I mean, there have been some exceptions of professional basketball, of some great, players who were
Muggsy Bogues.
Were not tall. But by and large, if you're 5'5", I mean, like I said, there are exceptions. You can try all you want. You're not gonna make it. Same simple running. You could train as hard as you want. You can run a marathon. Anybody can run a marathon if they train hard enough. Not that it's easy, but if you have sufficient incentive and drive and discipline, you could do it. But I don't care how hard you train, only a tiny percentage of the population has a physical body that can run a world marathon time. You have to have a certain type of skeletal,
they can run the whole average faster than most people could run, train their whole lives to run a single mile, right?
Yeah, I mean, but to take a male running time to run a 2:10 or under, you got to. It's not just a matter of drive and trading and everything. You've got to have a certain type of body.
Yeah.
So some people, a lot of people don't. Most people don't. So I think trading is a thing. Yeah. So trading is the same. I think that if you're really dedicated and you really love it and you put in the work and you develop a methodology and you learn risk discipline and all of that, you could become a profitable trader. I mean, maybe even most people can do that if they do enough, if they're dedicated enough. But you're not going to get people who turn 2,500 into 150 million. That's like a real outlier. It's only certain people have whatever it is. There's some almost undescribable particular skill that makes that possible.
And there's a healthy dose of luck in there too, I'm assuming, right?
I would say not really. I mean, there's luck that comes into it, but there's also bad luck. So in this book, I've got stories of good luck and bad luck. I think over the long run, the luck kind of washes out. And also, even when there is luck, the trader may be lucky in a way, and I'll give you an example, but he still takes advantage of it. So, for example, like the trader, let's stick with the guy I talked about who turned a few thousand into over 100 million. So he's always one thing he's doing. He's always early on. He's trying to catch these things, these trends before they begin, and he's trying to look for what's the next thing. So when CBD beverages were sort of starting and starting to become legal, so he's on to that. He's trying all the different beverages. He's going to his the biggest regional store selling these beverages, and he talks to the manager and whatever.
This is Camillo, or this is a different guy?
No, this is Jeffrey Newman. So he's the guy. Yeah. So he's at this big beverage store, and the guy tells him, "Wow, you wouldn't believe this product changed my life. I had this pain in my shoulder for like 15 years. I started drinking it." And so he ends up investing in it, and he's invested in other companies. And of course, the thing's going up and whatever. And he goes back periodically to check what's going on. And one day he walks into the store, and the manager calls him over, and he says, "We pulled it off they found some debris in some of the bottles. We pulled it off the shelves. So boom, he's off. He sells all his holdings in that stock and every related stock. Now, is that lucky? Sure, it's lucky. But he made his own luck.
Yeah, he was
going back to that store, So you tell me, is that luck or is it some persistence?
Yeah. There's a difference at scale too, right? Like I come back to the athletes, a golfer, like any of us could make a 3-foot putt, but how many of us could make one for $10 million, right? Like you have to be able to perform at scale with some of these hugely famous and successful names they don't blink twice trading 500 lots versus one lot.
Yeah, and a number of traders in his book, in fact, their approach is to take very large positions relative to their equity, at specific points in time. And, when they're very confident about the trade. And, so they have to be, it seems like they're taking a lot of risk, but they're so skilled that they're at both getting in and getting out, that while position size, it seems mind-boggling, they've got the discipline that they'll be out in under a minute if it's not working right. So, you've got to have a certain type of, fortitude to do that type of stuff, right?
Cojones. So lastly, then I'll finish up with our favorites, but what are some of the big takeaways from this book, but all of the books on basically what makes a successful trader?
Yeah, so in every book, the number one takeaway people should come away with is that risk management is more important than whatever approach you're using. So if you don't have risk management down really well, then the odds are against you, no matter how good your method is. And most people really focus almost 100% on the methodology or an entry method, especially, because that's like more fun, and that's how they can show you be a genius. You can't show the world you're a genius by your risk management. Well, actually, you can, because over the long run, that's what makes the performance. So, but that's always the number one message. I thought I was going to be writing books about trading, and I think if you read the books, they're probably more about psychology than they are about trading. So psychology is, in many, many ways, it comes up in every interview and in many different ways. So the psychology is extraordinarily important.
And which has even become behavioral finance is a thing now. That probably wasn't a thing when you wrote the first.
No, it wasn't. And I think good traders are instinctively behavioral acting like a behavioral economist. They understand that people, are not rational, and you're making the money. You make the money not by doing what's your human nature is leading you to do. You make it by kind of going counter to that in a way. And you have to, learn, because people have these misconceptions and emotional responses that are counterproductive. And being aware of those, and this is very much like a behavioral economist would think, being aware of those, how humans do not make the right decisions is important. So that's a very good analogy that a behavioral economist mindset is very amenable to the right direction in trading.
And they almost have it two ways too, right? They see it in others and know how to take advantage of it or structure their, and they can control their own.
Yeah, so one of the traders, the contrarian, Jason Shapiro. In fact, one of the things he does is he, as he's going through his career and met different traders, he knows those traders who do the wrong thing. They just instinctively do the wrong thing. And that becomes almost like a contrarian indicator to him. And he's careful about it. He's saying, look, he's not saying he's smarter than they are, but he went through a whole decade where he did the wrong thing. And he blew up his account twice. And when he sees traders who remind him of himself during the time where he was not doing the right thing, where he didn't have it down, where he was emotionally doing the wrong response, that to him is a contrary indicator.
Reminded me of a quick story of a trader we knew, very good, self-traded on the screen, modern days. But he identified every now and then he would chase and, have a big blow-up day. So he had the platform program into the computer. Basically, after 3 losing trades, it wouldn't let him physically place any more trades for the day.
That's a great story.
Yeah,
and that's a very good exercise of risk management.
But the programmer told me he'd get calls during those days.
Override.
Take that off.
Oh,
and he's like, you told me not to. I can't do it in a single day. It takes me overnight. He'd yell at him, and then the next day he'd be like, oh, thank goodness that was there. We finished all of them off with some quick hit favorites of yours. So
sure.
I'll start. Favorite ski mountain out there in Colorado?
Well, I'm a cross-country skier. So
okay.
But the place I ski at, I have a membership there, and then I live not far, is Snow Mountain Ranch, which is run by the Y, actually, which has a really great trail network. And for those few people out there who are cross-country skiers, one of the unusual things about this place is they've got a trail that runs up a mountain summit. So you could go, you could ski all the way up there, and then have like a 6-7 mile downhill ski. So it's pretty neat for a groomed trail to have. I mean, it's the only one I know of. And so,
what do they call? We were out in Crested Butte a few years ago, and they had the championships where they basically skin up the mountain and then ski down it.
Yeah.
Those guys were incredible. And it was like how many laps?
Yeah. So this is like, and those guys are probably using mohair ski to go up. So it's not quite the same thing. And then they're going down with downhill type skis or equivalent. Whereas here you're using cross-country ski equipment.
Yeah.
But so it's not steep like that. It's just, when you go up maybe a couple of thousand feet only. Only, I'm saying that's fine. That's a good amount on cross-country skis, but it's not like downhill skis.
And I've always found the cross-country ski events in the Olympics are thrilling. Right?
Yeah, they are.
More so than the downhill or anything on the.
They are. I still remember there was this, I think maybe 15, 20 years ago, and it's always in Norway. It was Sweden and Norway, the 2 top skiers. And I remember they like together for the last half mile, and they just the enormous speed they're going at, considering it's just their, manual, and one of them like by the tip of a ski,
right, the ski tip.
Yeah, so I love watching cross country.
And they, out of no other sport, they just die at the finish line, right? They can't lift a finger.
It's the most grueling. Of course, it's as grueling as you put in, but when you're talking about Olympic skiers, they are like really the energy they put into this. The amount. It is probably the most grueling sport in the Winter Olympics. Is cross country skiing.
Hopefully, we get the Olympics back this year. And what's it going to be? Summer and then a year off, then the winter. I think.
Yeah, I think we'll be okay in the winter part. Yeah.
Well, let's hope so. Favorite Boulder restaurant?
Boulder. Do I like any restaurant enough to give it? There's the Oak. I guess I would say the Oak is a really good restaurant. There are a number of different restaurants that are good. People are coming out to Boulder for a visit. There's there's a restaurant up halfway up the mountain. Now I can't remember the name of it, overlooking Boulder, but there's only.
Oh yeah, I've been there. Yeah.
So that's really neat because you're overlooking. You're kind of in the mountain and you're overlooking the valley, and it's all glass around. The food's good, service is good. It's killing me. I can't remember the name, but for people who are visiting Boulder, that's one you should go to just for the view, and the food, like I say, is pretty good as well.
That little waffle place at the base of Winter Park Ski Mountain's pretty good too.
In Winter Park area, the one I would recommend is the Tabernash Inn, which is a few miles out of Winter Park. And Tabernash is like a town that if you blink once while you're driving through it, you're gone. But the Tabernash Inn is a very good, is probably the best local restaurant in the area.
All right, I'll check that out. Favorite book of yours?
My favorite book was probably, if I had to pick one, I would say it's Endurance, written in 1956, I believe, and it's about Shackleton's adventure.
I have it somewhere.
You have it, yeah.
Beside or behind me.
Lansing is the author, and it is literally my single. I've read it twice. I've listened to it on audio tape. The audio version is excellent a couple of times. It's such an incredible book because it's a true story, and yet it is more phenomenal than fiction. Yep. Well, is that Lansing's book? Because there's several.
Oh no, yeah, Alfred Lansing.
Yep. That's the book. Yeah. So that's probably my single favorite book. I just love that book. I also would want to give a plug to Bill Bryson, who's one of my favorite authors, who has a great sense of humor. And so there's a book, Walk in the Woods, which is this phenomenally entertaining story about him and a friend. He's out of shape, and his college buddy, who's even more out of shape, decide to do the Appalachian Trail. And it is good in every dimension, in humor and in suspense, and at the end, and it's pretty. That's another book I would recommend really high. And he has this book that he wrote, something about everything, but he really writes like the history of science in a very entertaining way.
I've read. I don't think I've read one of those.
And he spoke on Australia's Sunburned Country. Bill Bryson, I would just like throw out there as a great author. And I have to give Michael Lewis. I'm sorry, Michael Lewis. Michael Lewis is just a terrific author, and you can't go wrong reading anything by Michael Lewis.
I was going to ask you earlier when we were talking about the books, if you ever had that desire to kind of Michael Lewis it and basically take these different interviews and kind of novelize it, right?
Yeah, I sort of found my format that works, I would like to be able to do. I would like to do that. I don't know.
Were you sitting there reading The Big Short, like, I should have done this?
Yeah, no. So, like I said, I fell into my format, and I just think, Lewis. Lewis, I just think is a phenomenal author. I'd like to be able to do that type of book. I've never attempted it, but I got something that the formula that works. So I kind of stuck with it. But,
I've always wanted to quit everything I do and start just writing fiction but basically they did it with the Billions Show. But if you did all the lawyer books, it's escaping me now, but what's the name with the Pelican Brief and all those?
Oh yeah, Grisham.
Right. If you did a Grisham style thing, but in the hedge fund industry, instead of in the law world, in the hedge fund world, would be interesting. But so when I asked you a favorite book of yours, I meant of yours you've written, but I also was going to ask you
my favorite
other books.
My favorite book. I don't know. I don't reread. I mean, I have reread maybe my books once, but I reread them after obviously I've written them. And I don't know if I've gone back. Sometimes I've gone back and read parts of it, but I don't. It's a hard question.
Like picking your favorite kid.
Yeah. The one I like least is easier to say than the one I like.
Okay,
most.
We'll take it.
Because I think Market Wizards, New Market Wizards, the first two books, and Hedge Fund Market Wizards, Unknown Market Wizards, I think they're all good. I really, so which one is best? Maybe Market Wizards because it was the first.
Yeah.
In some ways, though, like Hedge Fund Market Wizards had some of the most, I guess, a lot of insightful trading concepts in there, which professional traders could, I think, appreciate. And the new one, I think, might relate best to a lot of people because it is about just ordinary people who've done it. So, of those books, I'm not sure which one I would say is, and those are just the Market Wizards books. It's difficult when you deal with your own books. It's very tough.
All right, I won't press you too much on that. And then lastly, we ask all our guests favorite Star Wars character.
Oh, I'm not a Star Wars fan.
All right, well, you must know some of them. Any of them?
Yeah, but I don't have. I saw the first Star Wars, and that's okay. But not. I like science fiction, But I'm just not a I'm not a Star Wars fan.
All right. Well, I'll give you Luke Skywalker or Darth Vader. Your two choices.
Well, I'll go with the good instead of the bad. So we'll go with Luke instead of Darth.
All right, Jack. This has been fun. Any other thoughts for the listeners? Anything you want to share? What's the next one going to be?
Yeah, we had a lot of topics. So
yeah, it's fun.
Nothing that basically. Well, I'll just say for those listeners out there who are just early on to trading. I can give some advice that I think would be useful. When you start trading, or if you're early in trading, don't put all your money all your risk money into the account. Only use part of your risk capital, because if you do it all at once, all it takes is one. And in the beginning, most people do fail. So you don't want to make your one shot your only shot, or your first shot your only shot. So I would always advise people to, especially with the first meaningful trading account, to stay away from using anything remotely resembling their total risk capital. And the other thing I would say, which is not out of my books, just my own personal bias experience, is I personally, I'm not a trader by profession. I trade, I have my account. It's more of a hobby for me. Now, actually, I finished a book, and I've got, even though I'm involved with FundSeeder, I've kind of done all the stuff necessary for the platform. And so if it goes in spurts, I've got more time. So for the first time, I'm really trading. Even then, when I'm trading full time, I literally spend maybe an hour, trading, and then I'm skiing and the rest. It's not like I'm trading, I'm sitting in front of my screen. So I'm not a trader in that way. But my own experience is, I always, when I begin trading, and I started and stopped many times because either I was too busy for other things, or once I'm not doing well or giving back money, I stop. But whenever I start, I always start with an amount, and I say, okay, I'm willing to risk this amount, and if I lose this amount, I'm out, and then I'll come back again. And that's so whatever it is. So if you start with 100,000, if you could say, well, if I lose 20%, the day my account goes under 80,000, I liquidate everything. Something's not working, back to the drawing boards. And if you have that type of mentality, it'll keep you from blowing it all in one shot and digging deeper and trying to make it back and falling into all those human emotions that will steer you wrong. So I think that's a good piece of advice, is define how much you're willing to lose on the account before you liquidate everything and walk away and come and are able to come back another day.
And that rings true just in the hedge fund and managed futures world too, of investors coming in, predefine what you're willing to lose. So when it's down 15%, you're not emotionally making a decision to cut it off or whatnot.
Yeah, and do it before. In all these things, you make the decision before you take the action, because that's when you have the objectivity, like you say. Once you're in there, you've lost objectivity.
Yeah, you're in the heat of the battle.
If I get out now, it'll just rebound right after I get out. You start getting all these rationalizations. But if you can make these decisions at the start, then you're making an objective decision.
I love it. And I would throw in there too of like, you can't paper trade. You were saying put a sum of your money, kind of play with it, test out, see if you're good at this. Like in the bond pit with Baldwin trading, I would keep my little paper trade, right? I'd be like, oh, I'd have bought 20 here. I'd be down 80 ticks, and I'd buy 160 and reverse.
Yeah.
Like,
it's easy with money. Yeah.
I was great on and this was actual paper on a card.
Yeah.
That's why they started calling it paper trading. But if you took that, then I went off the floor and started trading on my own. It was not nearly as successful. So agree with that. Well, Jack, this has been fun.
It's been.
Best of luck to you, and I'll reach out to you next time I'm in Colorado.
Get
me out on the cross country trail.
Do you do any cross country?
I have done it, but it's not. I prefer the downhill, but I'd be up for it.
Yeah, sure. I'd be happy to do it. Let me know when you're here.
All right. Thanks, Jack.
All right. That was fun. Take care.
Episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you.